The Fed and Congress have committed trillions of dollars to help keep the economy from going into a prolonged downturn. But believe it or not, it may not be enough. Steve Liesman joins us right now with that story. And Steve, what's that mean? What's happening here? What would have to be there to keep this from happening?
It's a really interesting question here, Becky. Yesterday, I got to ask Treasury Secretary Steve Mnuchin and Fed Chair Jay Powell essentially the same question. Are they each taking enough risk with taxpayer money to help save the economy, especially to help those businesses least able to qualify for loans? In some video you haven't seen yet, here's Treasury Secretary Steve Mnuchin responding to that question.
There are people who have said, I should price this so that, we lose all of our money so that we support these markets. The $450 billion are not grants. So they are money that I invest in these facilities to create credit support. So I think it's pretty clear if Congress wanted me to lose all of the money, that money would have been designed as subsidies and grants as opposed to credit support.
Now, Mnuchin said he's not investing this like a pension fund or a private equity investor. In some scenarios the Treasury has run, they'll lose all the money. In some cases, they'll make money. In some cases, the base scenario is they break even. Now, I asked a similar question at the Fed press conference yesterday of Fed Chair Jay Powell, and he discusses at the end the limits on the Fed's authority to take risk.
We can do what we can do, and we will do it to the absolute limit of those powers. We'll keep at it. And I just want people to know that we will be at it with the legal authorities that we have until we get through this thing. We will keep using our authorities. But there are authorities that we don't have, and there may be a need for those authorities to be used as well as ours.
Okay, here's an example of what I'm talking about. The Fed announced the program to buy investment-grade corporate debt. It's going to leverage $75 billion of Treasury money at 10-1, so the total is 750. But the Main Street lending facility that the Fed hasn't launched yet, it's going to leverage another $75 billion of Treasury money, only 8-1, so the total $600 billion. The good news, Mnuchin has about $270 billion of more money he can give to the Fed to leverage. He said he'll use that where it's needed or when it's needed. Powell and Mnuchin could decide to take more risk for the economy if they need it. Andrew?
Hey, Steve, I wanted to ask you, I don't know how much you talked about the PPP program with the Treasury Secretary, and I give them an enormous amount of credit for the program they put forth. I know there's lots of issues we could quibble with, but the big quibble that I'm hearing about right now is as they've tried to shift the program to focus more on smaller banks and try to get at smaller companies, given that there's a view that some of the money went to the wrong players the first time, that a lot of small businesses, especially in states like New York and New Jersey, which are the hardest hit, are having the hardest time getting access to this. You look at some of the numbers, if you're in Nebraska, and I love the people in Nebraska, 90% of those loans are going through. But but New York is not, or New Jersey is not getting any special preference, and in fact may be getting less special preference because the big firms like J.P. Morgan and Bank of America are almost being pushed to the side. They have huge market share in places like New York and New Jersey. And what do you think is going to happen there?
Andrew, let me answer that question generally and then specifically. First of all, I think if you're the Treasury Secretary and you're getting complaints on the one hand that the big banks are getting special preference, and on the other hand, like you just mentioned, that the big banks are being shut out, you're probably close to being in the right place, because I've heard both of those issues. On the one hand, they had to set aside separate times for the smaller banks to get access to the SBA system. So that suggested that the bigger banks had special access. So I think the Treasury Secretary is trying, and I think probably admirably here, to really balance a lot of competing interests with the bigger issue, Andrew, that they don't have enough money. And a bigger problem for this PPP program is that a lot of the money is supposed to replace salaries that would otherwise be paid by unemployment insurance. And business owners don't have enough for their real expenses, whereas they should have the employees on unemployment insurance, and they should have loans to help with other expenses. So there is not enough money, and that's why the focus is going to be very shortly on how big and how much risk this Main Street lending facility from the Fed takes.